Hey, welcome everyone. This is Drippy, your source of options rip on a daily basis. You can find me on FinTwit, you can find me on YouTube, you can find me literally everywhere it's related to options, podcast, you name it, Spotify. Um, I am primarily options trader, so those who are new to this channel, please check out some previous videos. And I put out a lot of learning content for you guys, and 90% of it is for free. I do have a YouTube membership. I have Discord as well, where I go in depth on some of my trading strategies, and I live alert. So if you're interested in checking out, just shoot me a question on Twitter and drop a comment on YouTube, and I'll help you out. Um, Real quick, I'm not a financial advisor, so anything I share here are my opinions, and you should be responsible for managing your risk and taking profits. My ultimate goal with all of this is that you can create life-changing wealth, generational wealth, by learning how to do this rather than just copying everyone on FinTwit and copying people. And rather than that, my approach is that you learn by looking at it. And if I repeat this over time, hopefully you guys will understand, and hopefully you're profitable. Now, saying all that, where are we heading next? What's in it for the market? So let's look at SPY. SPY looks absolutely bearish right now, and we have this stopping pattern here on SPY, which does not look good. Does not look good. Here we have this kind of like this topping pattern with the head and shoulder. A lot of people talk about this, so I'm not gonna go in depth, and we are literally at the last line of support here until we can test here the 400 level, and then not much volume until 387 385 area. And why is this happening? Why is market bearish? First, inflation is rampant in the United States. GDP data was weak, and the federal government of the United States, responsible for the monetary policy, is looking into hiking the rates, which means that from 50 to 75 BPS, which means it's bad for the economy. It's not good, because if the rate hikes increase, the people who have and the companies who have loans, they need to pay more. And overall inflation, they are doing this to curb the inflation, but the problem is that this is not instantaneous. It takes time, and that's why these stocks are selling off. And we have SPY with a potential head and shoulder. So if it breaks, we are looking at, if this neckline kind of starts to break, we are looking at a potential like a 7 to 8% drop. And 7 to 8% drop will put us right around I would say 375 to 380 area, which is basically around this support area, around 366. So we don't know when market starts to sell off. It's staircase up and elevators down, so we could see some significant sell off. Now, saying all that, next week was critical. We have a lot of economic events. We have FOMC, we have on Wednesday, and that's pretty much the most important one in my opinion. So we'll be watching SPY. We'll be trading indexes more likely than anything else. Real quick, there's not much fear in the market right now because we haven't capitulated yet. What I mean by that is, look at this was put to call ratio for the global equity, right? Sorry, for the CBOE equity. And you can see here was around 2.88 during the COVID crash. And we are there's some fear in the market, but it's not panic more right now. So I want to see that, until I have some kind of idea that, okay, we have seen capitulation in the market, which is not, we are not there yet. And if you look at the percent of stocks above 50-day average, we are still at 23, which it kind of has bounced from this year. But if it goes below 16, percent of stocks goes below 16, we are going back to like maybe 2 or 10, which was during the COVID crash and like other crashes. So I don't think we are in a state where we have capitulated. So we have upcoming earnings soon. We have semiconductor, especially Nvidia. So we'll be watching that. But Yeah, I mean, looking at the flow for just like the SPY out of money here for 25 days to expiration and sorted by the premium here, super bearish flow here. You can see here on 20th of May, it's peaking. I mean, look at this, 87% bearish if I disable the bid side. And a lot of puts are around 398, 403, and 409, 410 area. So 395 and 398 from the current price is significantly lower, you know, and we are looking at around 4 to 5% more correction on these names. So going forward, we are very careful here. If spike, if breaks below this 409, 408, things can get nasty real fast, and that's what you know, we need to be aware of. All right, so now saying all that, where do we head next is a big question, and in my opinion, the answer is in crude oil. And I'm not gonna go in depth into the macro environments and everything else, but look at crude oil daily charts and daily squeeze, and we are in a pennant formation here. This break and retest, you know, it could come back to this area, retest this area, maybe tomorrow we have sell off, and then from there it takes off. And if it breaks below this, you know, this 93 area is of crucial importance. You know, if it breaks below this and closes below this, we might be in for a bigger sell-off in all commodities, not just oil, and SPY will follow that. We had the same kind of stuff in 2008, you know, but I'm not gonna go in depth in this video. Maybe that's for later, but yeah. So the name I'm watching is OXY. Now, OXY is in a big squeeze right now on a lower volume, and just looking at this, you know, it's in this consolidation range here. We did have a sell-off on it. The dip got bottomed up quickly, and then now it retested this EMA, and then it's still holding this level well. So in my opinion, I think we'll see continuation on the OXY. But if it does dip, you know, if the broader market pulls back because of FOMC, we might see it kind of like this anchor VWAP from this low here in December is acting as a support. So it might pull back to this 50 area, where I will most definitely be interested in buying the dip and this trend line support as well. And if it breaks below that, then yeah, it's a bearish sign. So let's quickly go through the flow for OXY. And you can see here that the flow is kind of bullish. We are seeing for May 60 call, and May 20th we have 60 call. If you click here, you start to see some you know, flow is kind of starting to be bullish. And one cool feature, new addition to the unusual whales, has been this COPE feature, which is awesome because you don't need to look at everything. So here what I did was bullish bearish volume, and look around this level, we are seeing the call volume is exceeding the bullish volume. So they're buying the dip with the options, right? And let me refresh this page here so I can see the COPE data, and here it is. And what this essentially kind of does is, you know, there's a good video on the Unusual Whales Twitch channel for this, so not gonna go in depth on that, but you start to see here the premiums are starting to price in, you know, a move up, and the price actually is down. So does that mean it's going to happen tomorrow? We don't know. Price could bounce around this area and then you know, start to curl up. And last couple of days we are starting to see some more flow coming in. The volume is increasing, and especially on Friday we saw the bullish premium was much more than the bearish one, much higher than the bearish one. So starting to see some kind of more volume coming in on the option contracts, so which is good, and that's what we like to see. And let's move on to the next one without going much in depth. I could talk about this forever. So let's talk about the next name I'm watching, which is Coinbase. First, look at this flow. Insanely bearish flow here, 105 puts and 110 puts being loaded, 105, 110 for 20th of May, and next week expiration 13th of May. Sorry, next to next week. And super bearish flow. And the reason is that they're most probably pricing in the Bitcoin to crash, and hence coin to dip as well. Coin excuse me, coin has already been in this massive bearish channel and massive bearish price action as well. It was in this range, broke, retested it, and now it's heading down. There is nothing down, there is no volume. What does that mean? That means that there's no buyers. Who's going to buy coin right now if Bitcoin is dipping, right? If Bitcoin starts to curl up, then it's a different thing. Then coin becomes a dip buy opportunity, but earnings are coming soon, and things can get nasty here. These are the fib levels and there's not much support, so it could go sub 100 real quick, and coin is a high beta name, so we'll watch this. Ideally I would like to kind of enter the retest of this 150 area, but it depends on the market. If market starts to rally, that's where I'll look into it, but I highly doubt it that will happen next week. So coin is on my watch list as well. So a break below 109.5, and you can trade the weekly contracts for coin. So next one I want to talk about is let's see which one is Airbnb. Now Airbnb is kind of in this consolidation zone here, and the squeeze just fired to the downside. Earnings are on 3rd of May after hours, and there's this gap here which and also this kind of pattern here where it's Airbnb kind of I think we'll have one final leg down before a move up on this one. And if it breaks below this 149 support, 145 is next. And the flow is also bearish on Airbnb, and I'm guessing it's because of the earnings as well. Look at this, 5 days to expiration, and someone has got $500,000 worth of puts, and it's not just one, right? They're seeing multiple orders here around 1 o'clock, around close. So excuse me. So bearish activity on Airbnb, and my guess is because of the earnings coming soon. So once it breaks below that 145 target is very, very probable. On a lower time frame, it's much more visible here. It tried to break out of this channel and got rejected, and then now I think it will continue down all the way till maybe 140 and then retest this low here. So that's what. And also notice how the red volume bars last couple of days have been much bigger than the green ones. So watch Airbnb, we had coin, we had Oxy, and then one final one I want to talk about is GS, Goldman Sachs. Now it's a bank. All the banks look bearish. You can pick anything. Bank of America, doesn't matter. JP Morgan, all of them look super bearish. We have this topping pattern on the banks here. Clear topping pattern here. And it's coming to its the excuse me this trend line support which broke and it closed below it. It has never done that, so we have kind of like this cup formation here, right? Another way to look into this is invert the chart, and now it start to look bullish, right, to you guys. So another thing I want to talk about is that it tries to retest this EMA before it creates another low. Let me invert it back. So that would be an ideal entry for me, but looking at how bearish the flow is, looking at how this consolidation area broke already and closed below it, this close below was super bearish, and there's not much volume below this area, so we could see significant sell-off on this name, below this area, below 298. Next support is 280 and then 265. So I like this name. I like the setup. If we could get like entry around 330, that would be awesome, but I doubt it will happen. But we'll see how it goes. And the flow is also, all the banks have, look at Bank of America, bearish. Goldman Sachs, bearish. And we have 302.5 puts for May 20th. So always buy time with these names, because banks don't really have high beta, so they don't really move that aggressive compared to like something like coin. So it's usually a good idea to buy some time with it. But let's say that Goldman Sachs can break above 320, so it's possible that it could retest this kind of this resistance area one more time around 335 and then continue move down. Either way, super bearish for GS. And looking at this volume profile for a weekly chart, you can see that it already closed below this area. It retested it once, now it closed it, and then there's not much volume, all the way until here. So it's thin volume, thin PA. I like to see that. Weekly squeeze already fired to the downside, and yep, the EMAs have already curled down. Excuse me. So these are the names I'm watching. Real quick recap: Coinbase for bearish, Airbnb bearish, Goldman Sachs bearish, and then we had Oxy bullish. Now, one thing I want to talk about is, let's say that if market rips, right, which stock I'll be watching? I'll be watching Facebook, because Facebook on weekly is holding this trend line support well, after the earnings gapped up. And if market suddenly starts to rip, I'll be watching Facebook. There's a huge gap up, and the flow for Facebook is also bullish. But I don't trust this flow. But look at this. We have lots of bullish orders coming through for 210 call, 215 call expiring in next week. So maybe they're expecting Facebook to rally, but I'll rely on price action more than anything else. And another one I'll be watching if market rips would be Apple, since Apple earnings, excuse me, Apple earnings were pretty good, and it started to sell off. But we're seeing here that this volume zone, it could come back to this 150 area and then continue. We have this trend line, but if Apple breaks this, it would be bad for the market overall. If Apple breaks this trend line, we had something similar with Goldman Sachs. We had this kind of trend line support which it broke, and after breaking that, like this here, it's just been a disaster. It actually gapped down, and then so something similar we could see for Apple. If broader market pulls back, Apple is the last one standing right now, but if it breaks below this 150 area, oh boy, could be, things can get nasty for Apple. There's this gap here at $100, which a lot of shorts would be you're right here, this gap, and it's a big move for the downside if that happens. So these are the picks. Remember, VIX will be high. It's not the appropriate time for us to swing anything, because as the VIX is 33, there will be much more volatile movement in the market, and we have to be extra careful with swing trades. Day trades are the bread and butter for us. So that's all I have for today, folks, and I hope you like the video. Subscribe to the channel, retweet and share the stuff so everyone can learn, and in return I can get more visibility on online platforms. And thanks for all the support so far, and I'll see you guys next week, which is basically tomorrow.